All right, you're listening to Interchain FM, the Cosmos radio station. If you're seeking alpha in the cosmos, look no further. I'm your host, Chango and Chain, and today we are here with various special guests from 3 different protocols, and we're going to figure out how these protocols are going to be composed so that you can maximize your yield farming potential. That's great. Also, I want to do a cheers right now because congratulations to the whole crypto industry for the ETH ETF getting approved. We're only getting higher. What's next? What's next? Is it Solana next? Is it Cosmos next? Which token is it going to be next? It's going to be Osmosis. I have my Osmosis glass right here. I'm going to drink some wine. Whew. Cheers, guys.
Cheers.
Cheers, cheers.
Cheers.
And I've also got my second one, just in case, my Atom my Atom glass. Just in case the SEC or CFTC, whatever you guys want to approve this. CFTC, maybe you want to approve Atom as a commodity and do the next ETF for that. All right, let's do it. Welcome y'all. So David, I have had David on Interchain FM for the last 2 episodes, one very recently. So welcome back to the show. And we've got 2 new guests, Tien from Pendle. He's co-founder of Pendle. Zuling is actually my partner for the Interchain FM validator. So welcome Zuling for the first time onto the show. But he's now building this protocol called Bedrock, which is going to let you do various interesting things once Bitcoin staking goes live. So welcome to the show. Let's go around with backgrounds and intros. Let's start with you first, Tien.
Yeah, so I'm Tien, co-founder of Pendle. So Pendle is a protocol for the tokenization of and trading of yield. I think effectively what we do with as a protocol is to tokenize yield-bearing assets like AUSDC or CDAI into principal token and yield token, representing the principal component and the yield components of these yield-bearing assets. An analogy that I would use to describe that process is like stripping a bond into zero coupon and coupon. So the use case there is that if a user wants to speculate on yield, they can acquire or trade YTs. And then if they want to obtain the fixed yield, they can purchase the PT. So we've been around since 2020, but we only started to see traction last year, and then more seriously this year when we supported various restaking assets. And I think one of the more recent use cases around Pendle is points trading, of which we have enabled a newer kind of primitives to be traded on Pendle.
Great. We'll get back to all of that later because that was a great high-level overview, but we want to get into details like what's YT and PT, that kind of thing, and the Web 2 lingo, defining those things. Zuling, welcome to Interchain FM for the first time on the front-facing side.
Yeah, hi, Django. Thank you for getting me on Interchain FM. Great to be here. So Bedrock is probably much newer compared to Pendle and Babylon. But what we're building here is basically allowing different assets to have a native yield that is not coming from trading or lending, but actually from more of a security staking yield. And so we started with Ethereum at the beginning of this year, given our long history of running Ethereum validators. So we issued Uni ETH, meaning that users can stake ETH, native ETH, and automatically it's restaked on EigenLayer. So they're getting multiple yields. So that includes staking yield, EigenLayer yield, and also ABS yield in the future as well. And then Uni ETH is already traded on Pendle, meaning that users can either secure their stable principal yield, or they can speculate on the future yield about YT. That's why we've been working very closely with Tien. So very similarly, when we look at, okay, what would be the biggest opportunity in the market, is actually Bitcoin, right? Historically, Bitcoin is just like gold. You don't get any yield at all. And actually, you got to pay for, storing it in your custody or something. So that's where we look at Babylon, and we found, hey, there is a non-custodial way of outsourcing the security of Bitcoin, both from a technology standpoint and also from an economic standpoint, and that's super cool. Hence, we introduced UniBTC, which is going to be very similar to what UniETH works, right? So users convert their BTC as UniBTC, and they're going to get multiple yield that comes from Babylon, that also comes from all the DeFi integrations that we're going to do in the future. And Pendle is just one of a very attractive venue for any types of yield product. So it's great to be here with Tia and also with David. We would love to talk about how BTC would look like in the future, right?
And of course, David needs no introduction on this podcast since we've had him on multiple times, and Babylon is within the Cosmos ecosystem doing great things. David, I just want to get your feedback and what your thoughts are about this new development. Is this something that you had anticipated in terms of killer applications? And yeah, what are your feels about this?
Okay, yeah. So hey, great to be back here, Tango. Yeah, so the thing is the following, right? If you think about the evolution of Ethereum started with proof of work, and then merge came 2 years ago, became proof of stake. Now, when Ethereum came out with the change from proof of work to proof of stake, is really from a security standpoint, the security model has changed, right? But actually, much more happened because of that security model changing. Is it became it generate a new industry, a staking industry. And so this primitive of native staking, as Juling mentioned very well, this notion of staking for security rather than trading or lending, it became a sort of a very primitive, very important primitive, economic primitive, or so to speak, in addition to security primitive for Ethereum. And so the whole industry, additional primitives are built on top of that. First, there's liquid staking, and then there's eigenlayer restaking, and then now there are many liquid restaking tokens, LRTs, right? So it's a whole industry. And so when we think about this idea of Bitcoin staking, we sort of have this in mind as to use this as a primitive, not only for providing security to POS systems, which is our original intention of staking, obviously, but this whole importance of this primitive as catalyzing this whole staking industry around Bitcoin is certainly something that we have in mind. Although our job as Babylon Protocol is focusing on this primitive. So we're very happy that now many other projects are building on top of this primitive that we generate in order to catalyze this staking industry around Bitcoin. And I think this is pretty amazing development, but not totally surprising given our experience with Ethereum.
Right. First of all, let me define liquid staking and disambiguate it from restaking in the eigenlayer sense, because I think just because it's wrapped in a different wrapper, that we're not it's not necessarily a new idea, in that eigenlayer AVS chains are essentially Cosmos ICS chains or Polkadot substrate chains, or parachains rather, and restaking in the eigenlayer nomenclature really amounts to shared security. So in in that sense, it's nothing new. And insofar as Babylon utilizes Bitcoin for securing various Babylon ICS chains, I'm just going to call it that. I don't know what you actually call it. That makes Babylon sort of the eigenlayer of Bitcoin. And so the yield farming opportunities that you would get from quote unquote staking Bitcoin on Babylon is you're earning yield in the tokens that have opted in to receiving Bitcoin as the underlying slashable collateral, as the basically shared security layer, or shared security token rather. So now after we've moved on from this, and let's imagine that Babylon is live, mainnet is live, and people can start staking their Bitcoin through Babylon. Now what happens? What can they do with Bedrock and Pendle?
Okay, maybe I take first crack here. Yeah, so Babylon has provided an option for people to stake their Bitcoin, right, and potentially earning yield that comes from the Babylon chain itself, and also other proof of stake chains that's going to use the security of the staked Bitcoin. Yeah, so what Bedrock helps is to allow people participating in that economic security while maintaining their underlying Bitcoin and also the yield liquid. Yeah. So without Bedrock, users' Bitcoin is just gonna be locked, and there's nothing they can do after that, right? But if they start to work with Bedrock, so their underlying Bitcoin will be locked in some of the custodians, because unfortunately Bitcoin does not allow non-custodial, does not have a smart contract right now yet. But at the same time, they're gonna have another token, which is UniBTC, which is gonna be in multiple chains. So users can use, first of all, without unstaking, they can trade their UniBTC as they wish, but at the same time, they can participate in various DeFi opportunities, either by provide liquidity on DEXs, or to collateralize their UniBTC for cash. If they don't want to sell off their tokens, but just pay for their daily expenses or something, or there are more exciting opportunities. I think Tian can talk about how LRT has worked out on Pendle. So in essence, this is to, first of all, make whole BTC staking much more liquid and also user friendly, but at the same time giving much more yield opportunities for users.
Yeah, I think to build on top of what Julian's mentioned about the yield opportunities on UniBTC, Pendle's role is an added layer on top of it. So effectively, Pendle is a venue for yield and points trading. So what we've worked with Bedrock previously was on the UniETH, the listing of UniETH, and there's a points component to it. So because the way I look at Pendle's involvement in a lot of these projects and asset is to help these protocols bootstrap liquidity. And I think Pendle, because of the involvement of points and yield, becomes a very attractive venue for traders and speculators to come in. So typically we see multiple categories of users. On the one hand, if a user is very bullish on the protocol, let's say in this case, it could be having points coming from say Babylon and also Bedrock, the user could potentially have exposure into the points, and they could acquire it through buying YT. So just mostly to maximize their.
Can you just define YT?
Yeah. So in the case of Pendle, right? Pendle works with yield-bearing assets like UniETH and UniBTC. So yield-bearing assets, when they are deposited into Pendle, gets stripped, basically split up into two components and represented in the form of PT and YT. So PT represents like the principal component. Basically, it refers to the underlying deposit. And then any yield that is paid off or generated by this underlying gets accrued in the YT side. So it's like a coupon.
So okay, right. So that would be what, principal token and yield token,
Correct.
right? Yeah. And the reason why you segregate these two is because you're now allowing people to trade those with each other.
Yeah. So they can trade.
And this mirrors the bond market in. Can you just describe that for people who aren't familiar with Web 2? I mean, sorry, TradFi.
Yes. Yeah. So I think an analogy that I would use to describe Pendle's mechanics is coupon stripping. So typically for in the case of bonds, right? Once they're with coupon stripping, there's usually two components. Like one part is zero coupon, the other part is the coupon side. So zero coupon PT is similar to a zero coupon, in which like it will be trading at a discount, and then at maturity, it can be redeemed for the underlying one-to-one. And then YT is similar to coupon, and it is the component that accrues all the yield that is paid out by the underlying. So in this case, say specific to UniETH and UniBTC, because these are assets that will generate yield. When a user deposits these assets into Pendle, there will be a PT UniETH, PT UniBTC, and then there's a YT UniBTC. So here I think,
and in this case, the PT, the principal token, would that be basically like a receipt of Bitcoin, right? The receipt that you get from Babylon, or rather from Bedrock is creating the UniBTC out of the staked Bitcoin on Babylon.
Correct.
David, is there going to be a name for that? Like, how does Babylon name the ticker symbol for what represents staked Bitcoin on Babylon?
What represents staked Bitcoin on Babylon is entirely the scope of the liquid staking LST, right? So in this case,
so that's not even
Bedrock is the LST in this current discussion. So it's up to them, I think.
So
we
right.
only run the primitive of staking.
Got it. Yeah. So basically, UniBTC is the receipt.
Okay, so UniBTC is just going to be one possible, it could be the first mover, but one possible version, derivative, or receipt of the Bitcoin staked. And
right, yeah.
So once you get the receipt, then you deposit it onto Pendle, and then Pendle starts, or Pendle rips away the yield component, and it segregates it from the principal component. And then the principal could always be tradable and redeemable one-to-one for Bitcoin, but the yield-bearing part of the Bitcoin is going to be segregated and tradable as YT.
Yes, correct.
So wait, one clarifying question: what happens because if I understand correctly, on Babylon, the yield that you get through staking Bitcoin, it's not all Bitcoin, right? Right, David? It's you're getting yield from the whitelisted Cosmos app chains.
Yeah. So I should clarify one thing, which is the Babylon protocol is actually to be used for not only Cosmos chains. Certainly, Cosmos chains are very important partners that we talk to, but also more generally any proof of stake chain. So just a side comment there. But yes, the idea of this economy is that the yield is coming from the chain that is getting security from the Bitcoin staker. So therefore, the chain will pay yield in whatever denomination that sort of supports that economy. Now, one of them, a natural one, would be the native token of that chain. For example, osmosis would be Osmo. Cosmos Hub could be Atom. Yes, I'm just using a relevant example here for Chango. However, it could be, though, that you could come from other things. For example, if it was a stable coin chain, it could come from the stable coin as well. So, but yes, but in general, it's not guaranteed to be Bitcoin. Although it could be if it was a Bitcoin L2 that is getting security from the, so it could be Bitcoin. But yeah, so it's whatever that is generating the economy of that chain for which you're providing security to.
In what instance would that having some pro rata share of the UniBTC give them exposure to Bitcoin staking rewards? It's like, where would the Bitcoin come from?
Sorry,
Yeah.
this
Okay, yeah. So Chingo, so the yield is not necessarily in the form of Bitcoin, right? So as David explained, actually as a user, once you stake your Bitcoin,
Is it at all?
you're gonna get.
And is it at all earning any Bitcoin? I wouldn't, probably not, right?
Yeah, at the very beginning, unlikely it's gonna be in the form of Bitcoin. It's gonna be in the form of a basket of different tokens, right? Whoever uses the staked BTC security. So that could be, some of the Cosmos app chains, or it could be some of the Bitcoin layer 2s.
Sure.
But in fact, yesterday I was in chat with a few Bitcoin layer 2s, and all of us are agreeing that it'll be super cool. Ultimately, all the yield will be distributed in the form of Bitcoin. So that can be done in two ways, right? Number one is there is a DEX that converts all those different tokens into Bitcoin. That's one way to look at it. But the other way is that, okay, if some of the Bitcoin layer 2s are going to use Bitcoin as their gas fee, hence, or their staking yield, hence it will come as a native Bitcoin ultimately. But look, Bitcoin has been very steady and I would sometimes say, a bit too conservative for years. But this is actually the first time that we could start having such discussions to have a yield for Bitcoin, whether it's in a form of different tokens or in the form of Bitcoin ultimately. So this is also the beauty of it, right? Because the yield comes in various forms. So users actually have an option on Pendle to say, okay, I want to secure, my yield for the next 3 months. So let me sell off my YT, which is yield token, and just keep my principal token. So I've already secured my future yield for the next 3 months. And usually, it's quite attractive. If you, let's take, Uni ETH as an example, the yield for PT actually goes up to roughly 30 to 40% per annum. Compared to Ethereum native staking yield is only 4% right now. But for other types of DJ guys, they say, hey, unfortunately, I don't have BTC, or I don't dare to try to stake my BTC, but I do want to have exposure into Babylon, or all the other yield that comes with it. Let me just buy YT. I don't need to hold the PT. Let's just buy YT. And right now it seems like, okay, it's only 20% of the PD. Yeah, it's cheap because I think Babylon has a bright future. There'll be much more opportunities, and those guys just get into YT. So Pendle gives people the option. So Bedrock gives people the opportunity to participate in Babylon, and with Pendle, that's where people has the option to participate in various ways, whether they just want to look at the yield itself, or do they want to secure their principal. So that's how at least this year, this is what has been working out as a whole. And now, and Pendle, we're talking about over $1 billion of market that people are participating in such ways.
So going back to Pendle and how PT and YT are segregated. So in the UniBTC case, now that we know that the yields that UniBTC is getting users exposure to is really a basket of myriad different assets. How is that reasoned about on Pendle?
Yeah, so the basket of earnings in whatever form they they are will be earned at the YT at the YT component. So let's say if the payout is in say a BTC, right? Then the user on the YT end will be receiving the earnings as it is.
Okay, so maybe okay, if I just understand this correctly, it's, let's say someone is long Babylon and long the exposure to the different Babylon ICS chains, but they don't necessarily want to go. They just want to farm it. They don't want to go into the market and buy them, or maybe they're not launched yet. Who knows? Maybe they're just points. And so I'm going to buy the YT tokens on Pendle and use that to then what? Like redeem the coin, the coins, the tokens from Babylon later on, whatever they turn out to be. Yes,
correct. So there is, I think, one very important aspect to it as well. So that is the maturity date. Like every Pendle pool has a maturity. So with maturity, it basically means that the user has the right to, let's say if you're a YT holder, you have the right to claim all the yield that a certain position generates until the maturity. So past that maturity, everything kind of refreshes. So let's say if you buy YT and the maturity is 3 months away. So from today until maturity in 3 months time, every day you will accrue yield that is paid out from, say, either Bedrock or Babylon. And maturity, any time in between, actually, you can claim the earnings. And if you want to sell away your YT position, that is a possibility as well. Because sometimes I think like YT price is very dynamic, and it is also very subject to market demand and supply as well. So from time to time, let's say your entry price is like, say, $1 for every YT. And 2 days later, it becomes $2 per YT because the market perceives it to be more valuable. You as a user, as a holder of YT, can actually choose to accrue the yield for the next 3 months, or you can sell it away when the price is attractive.
Got it. All right. That's interesting. So let's move on to the edge cases and security model that this, or new security paradigm that this introduces. David, have you thought a lot about this, about what the consequences are for various Babylon ICS chains that depend on Bitcoin for security in the case of a black swan event? Black swan event, Bitcoin drops by 90%, such is the case with previous bear markets, right? Something like FTX could happen again. It will happen again, right, in a year from now. And what happens to the security of the chains if a whole lot of the underlying slashable Bitcoin is being, synthesized into a derivative and then actively traded elsewhere, either as collateral and being loaned against? And this is kind of like the daisy chain of different protocols that, while it introduces capital efficiency into the system, it does introduce some risks that are relatively difficult to reason about, right? Because now it's no longer just vanilla proof of stake. We've got some interesting market-based dynamics that.
Yeah. So that's a good question. So in fact, I'm trying to digest all these things that TN is trying to tell me, because I thought I understood Bedrock. Yes, I think I understood Bedrock. But Pendle is like, whoa, another ball game here. So I don't come from a finance background, so I'm just trying to digest myself. But let me just try to first answer the question from the level I know, right? So security depends on the value of the asset that is providing security. So you're correct. So if Atom goes down 90%, the security of Cosmos Hub also goes down 90%.
Yeah.
So in some sense, this is not new, right? This is the fact that Bitcoin can go down 90%, or other assets can also go down 90%. In fact, if Bitcoin goes down 90%, other assets probably go down even more than 90%, you would imagine.
Mm-hmm. Oh yeah, Bitcoin tends to go down 50%. Everything else goes down 9%. Yeah.
So this is not a new discovery about proof of stake system. It's a intrinsic characteristic of a proof of stake system where the security is bared by the value of the capital. That is okay. Now, I must say, right? Why are we providing? So the question is, why? What is the meaning of security? Why are we providing security to these Cosmos chains or other proof of stake systems? It is because we have slashing. Okay, so slashing is what provides the security. Now, in my mind, right, whatever protocol that Bedrock builds on top of us, or other liquid staking protocol, liquid restaking protocol built on top of us, as long as the slashability is not prevented, which is actually the primitive that we have, right? So the fact that others built on top of us some representation, okay, would not change the fact that our asset is still slashable because it's locked in our contract. I think the concern should be more the other way around, which is, okay, what happens when our staking asset is slashed? What's the impact on all these other representation of the stake Bitcoin? I think that is the right question to ask, if I understand correctly. Maybe you can let others to chime in here, but that's sort of my understanding.
Mm-hmm. Yeah, maybe I can just add on to what David is saying. So totally agree with that. So in fact, UniBTC is a representation of the underlying staked BTC. So in an event of slashing, so all the underlying Bitcoin is gonna take a cut, right? Let's say maybe 0.5% or 1% of the staked BTC, and proportionally, all the UniBTC holders, which means that, okay, when they redeem, they're gonna get 0.5% or 1% less BTC. So so UniBTC is slashable in that sense because the underlying asset is staked on Babylon, so it goes with all the slashing rules. So this also goes to our fundamental philosophy, right? So for Bedrock, we are always looking for long-term and sustainable yield opportunity, and hence build an asset on top of that. So the first one was Ethereum, and now BTC, and also we're pretty big in deeping chains because we think that's another very interesting yield opportunity. And actually, the first time I met David, I asked him, merge mining is something that has existed many years, right? But it doesn't really work out in the proof of work world. And David actually told me that, okay, the fundamental difference here is that merge mining does not have slashing. So, big miners from Bitcoin can easily just crash a new chain without any punishment. But in the Babylon system, this is totally different, because if they trigger a double spend on any other proof of stake chains, they get slashed. So this is how they can guarantee that proof of stake chains can safely use the security of the staked BTC, and also with the timestamp, that also makes things much more robust to be linked with Bitcoin. So with that improvement, this is where we got the assurance that, okay, there is gonna be a sustainable yield for the staked BTC because proof of stake chains will be comfortable using it. And another thing that we really liked about is that Babylon is not only just trying to, let brand new chains to use it, but they managed to, work with the whole Cosmos ecosystem. So meaning that, there's already a proven a group of chains that are happy to use Babylon security, and hence a yield is already secured. So this is slightly different from some of the ABSs on EigenLayer, where their feasibility is still yet to be proven, right? So this is what from Bedrock's perspective, given that we have been on both sides, and this is what we have observed.
I'm interested in you expanding on that, Zuling. What is the difference that you've observed?
Yep. So, okay, the first is that yield is only real if people are using Babylon or using EigenLayer, right? So you can see them as kind of like a marketplace where people can rent the security either from Ethereum or from Babylon, right? So that is where the ABSs comes in. So ABSs, nobody knows whether they're gonna be there for forever or for long term, right? Okay, so who actually needs a shared security? Is this more about a cross chain, or is this about DA? So in the Ethereum ecosystem, seems like the most no-brainer is actually a DA. But other than that, the ABSs, we're not sure, how long can they last or how big they are, right?
I understand.
So in the Babylon case, yeah.
Right. The open question is whether or not ABS chains even need to exist in that architecture, or if there's actually some other kind of architecture that decentralized apps actually should use more optimally. Whereas in the Babylon case, because Cosmos app chains obviously could benefit from an source of slashing collateral that it makes it bootstrapping easier.
Yeah, I mean, definitely. I'm holding the belief that definitely ABSs are needed, right? But it's more of a question of in what form or what are the businesses that actually should be on ABS. For Bitcoin, this is like totally a blue ocean, right? There are so many things people can do because there's not that much applications on Bitcoin. That's why we see there are much more actually opportunities of services using Babylon security.
Yeah, the other reason why I think that Bitcoin is a much more robust underlying source of collateral than using Ethereum is because no matter what happens, even if the Bitcoin gets slashed, it doesn't have any implication for the underlying Bitcoin blockchain whatsoever, for the security of the Bitcoin blockchain, and that's the power of proof of work. But on Ethereum, if that gets slashed, or if if EigenLayer becomes like a honeypot, or if they somehow redirect the ETH voting power to inform governance decisions, then that introduces a whole new can of worms.
So so I would like to add a comment on that, right? So when you said that Babylon is the eigenlayer for Bitcoin, well, I love Shiram. Shiram is a longtime friend, but I just want to clarify conceptually that Babylon is actually not only eigenlayer for Bitcoin, or not eigenlayer Bitcoin. The reason is because Babylon essentially provides the staking primitive, and eigenlayer builds on the Ethereum staking primitive. So I think the focus of Babylon is really the staking primitive. The restaking is sort of something that one can add on top of that, just like eigenlayer can add restaking on top of e-staking. So I think that's sort of the interesting thing about Babylon is that we add the staking primitive, but the chain itself, the Bitcoin chain itself, is still proof of work. So there's no sort of a recursive nature to the system. And that brings to the point of sort of this reducing this sort of over leveraged risk that Vitalik talked about a few months ago on a tweet.
Right. In this sense, the Ethereum ecosystem is much more at risk than the Bitcoin ecosystem would be by introducing these primitives. That's fair enough. Yeah. So Babylon is more of like even like a lower level layer than something like restaking, which is correct, right? Like
yes, it's the more basic it's the more basic
Babylon.
primitive, yeah.
And then we've got Bedrock, and then like Bedrock uses Pendle. We've come full circle. So yeah, right. So in the Babylon case, what about slashing conditions? Is there going to be more dynamic slashing conditions in the future, or is it going to remain as slashing conditions only for the double spend failure mode? Are there other failure modes that you're going to account for in the future?
Yeah, so you can think of Babylon slashing conditions is basically the slashing conditions sufficient to provide consensus level security. And that's why a perfect use case is for chains like Cosmos chains or any consensus systems. Now, if you go to more general AVS, more general slashing conditions, okay, then there are several types that people are talking about. Okay, so those you divide into two types. One is kind of like execution. Okay, for example, if there's invalid execution, now invalid execution is something that Ethereum eigenlayer restaking can use smart contract to slash for. And Bitcoin, because of the lack of smart contract at this moment, could not provide the support of invalid execution. Now, there are two ways of solving this problem. One is that you could use other technology, such as ZK, validity proof, to prevent invalid execution in the first place. Two is you could use another chain, for example, the Babylon chain, to slash for invalid execution or other executions, other slashing conditions. So that's one approach. So we're working on multiple directions there to extend the slashing conditions. But the reason why we're kind of focusing on the proof of stake consensus market is that there's a perfect fit to the slashing conditions that we have and what the chains need. So, Shuling mentioned about AVS, right? So AVS is kind of a new sector, a new industry sector. And that comes with it all kinds of slashing conditions. And I think right now, eigenlayer doesn't even slash, as far as I understand. There's no slashing. So the new slashing conditions beyond these basic consensus level slashing conditions is still rather in flux, I would think. And I think that would take some time to settle out. And in fact, some of the slashing conditions are subjective. For example, Oracle slashing conditions are actually subjective, not objective. And so there's still a lot of debate as to how or whether to incorporate these slashing conditions. And I think that is going to be discussed for quite a while. But meanwhile, we're focusing on some very well understood, very objective slashing conditions. And that's what our technology is focused on right now.
Sure. Like liveness faults and double spends. I think those are the main ones. Yes. Cartelization, collusion, that kind of thing. Oh, so, okay. All right. In terms of the economic security of these chains, so I want to use the eigenlayer scenario where, so for example, in eigenlayer, it's pretty cut and dry, right? So if there are, let's just imagine eigenlayer has 50 different AVS modules, and and for whatever reason, all of the AVS modules have some kind of bug in it, and the value of the exploit that the attacker could extract from exploiting the AVS chains is greater than the total value of what's staked on eigenlayer, right? So that would be like, upwards of 16 billion. But imagine there's more. I don't know. We're in a bull market. Anything's possible. Then at that point, it's actually more profitable for the eigenlayer, for people to exploit the higher level applications because it's cheaper, or it's the EV is higher to do so. And in this case, in the Babylon case, is that possible? Where if, let's imagine that the different Babylon ICS chains, there's like some kind of bug, and it's cheaper actually for people to exploit or to double spend, basically, in order to exploit the chains that depend on the Bitcoin that is secured on Babylon. Sorry, that was kind of a long-winded question, but I hope you got this.
I got the question. So I'm ready to answer.
Do it.
All right. Okay. So I think a very important point is that what you're talking about is restaking. Because for us, the primitive of Bitcoin staking, which is to stake to one particular chain, does not have this issue of sort of the fact that you get multiple slashing. So I think what you're talking about is that if I stick in like 10 different chains or 100 different chains simultaneously, then I can get slashed on all these chains. And then, whoa, maybe this is even more than my capital. What happens there, right? I think that's the question. So I think very importantly, this is first, this is something that you built on top of the basic staking primitive, number one. Number two is that how much restaking is kind of a choice of the staker, actually. It is not a global decision that, Eigenlayer or Babylon decides to stake on 500 different systems or 50 different systems. Each individual staker depends on their risk yield appetite, perhaps, would make a choice as to how many restaking. I think this phenomenon is probably true in Babylon and also true in Eigenlayer. I don't think this concept is very big distinction feature. If I understand correctly. Yeah.
Got it. All right. So
if I may just to add a bit thoughts here, right? I mean, we have also observed this in eigenlayer systems as well, right? So the question here is that, okay, the security model is 1 to n, meaning that, okay, one staked BTC or staked ETH to how many, to n number of use cases, right? So the risk cascade is something that people need to take note of. This is also one of the roles of liquid staked or liquid restaked protocols such as Bedrock to take, because we need to think about two things. Number one is that, okay, what is the maximum risk to our users? And also, what are the ABSs that we want to participate in? So in this case, I mean, right now, we are, if, there are different ABSs doing like totally different business, totally different slash conditions, then we have to judge them one by one. So we need to talk to the team, understand what are the slash conditions. And luckily, we have a lot of experience running an operator for them. So we have control of that. But in the Babylon case, it started with more straightforward conditions. Okay, double spending. Actually, it makes things much easier to understand because that's just straightforward. As long as we know the operators we choose will never double, will not double sign, then we're okay. Yeah, if it's a much more complex slashing conditions, then we need to look at the edge cases because there could be theoretically, attack, which is a malicious ABS actually has very funny slashing conditions. So actually that's an attack to Ethereum or to BTC itself.
Right, sure. So, to those of you listening live in the audience, and if you have questions for our guests, go ahead and put them in the YouTube live chat. That's how we're going to bring you up. But if you don't have any other questions, I have a last one, and this is for TN. So, from your point of view, once these protocols are live, what would be the most optimal yield farming strategy if you are long Babylon and Babylon ICS chains or short?
Yeah, so I think if in the case that you're long all this like upcoming opportunities, the best way is probably to be involved on the YT side, basically buying up YTs to increase your exposure in the underlying chains and assets. So with YT, it's largely I think like because a lot of the say upcoming projects that are building on top of Babylon that we're speaking to, we anticipate that they will be launching points program. So the highest EV thing that like using the what we've experienced and observed with Eigenlayer, I think there will likely be a lot of similar patterns in the Bitcoin ecosystem as well. So using the Eigenlayer restaking as a reference, I think the points will be something that can be quite attractive to a lot of users. And if they want to maximize their earnings, buying the YT is likely the more optimal play here. Now, on the other hand, if a user wants to lock in yield, then buying the PT is the more sensible play here. And I think like to add on, we see a lot like there's usually a very clear segregation on the profiles of the user between YTs and PTs. Typically, for retail users, where capital is more limited, and for users who want an outsized return, then they would usually want to participate on the YT side and speculate on points. And then that in return creates very good opportunities for a lot of the fund managers to lock in earnings at a relatively desirable APY. So using UniETH, for example, Julian mentioned that at one point in time, because there is a very strong demand on the YT side, it also creates an opportunity for, like, say, the bigger institutions to lock in the APY at 30 to 40% on UniETH. So I think these are the different plays that different profiles of users can consider when the market is live.
Got it. And so, but just to help understand the Pendle protocol a little bit better, I'm a user myself, and if someone were just to do, vanilla deposit or zap in the Uni BTC or Uni ETH to farm Pendle, is that a relatively, is there a more optimal strategy than just a naive one like that?
Yeah, so generally, I think at least on our end, we would encourage users who don't have a view on either the protocol or the fixed rate to become liquidity providers. And the way we structure the AMM is such that if the asset is deposited into the pool until maturity, there's actually no impermanent loss for the deposit, because at maturity, or rather like the composition of the assets in the pool is the underlying and the PT. Because at maturity, all the PTs will be redeemable one-to-one for the underlying. So effectively, at maturity, the assets in the pool will have the same value. So that's why, like, if the asset stays in the pool until maturity, there isn't much impermanent loss. And yeah, for most users, that is actually the more preferred strategy there.
And what happens if they take it out prematurely, or if they keep it in past maturity?
Yeah, so if they keep it past maturity, there's actually no issue. Like because the assets will still remain the same value, so there's no impermanent loss. But if they were to withdraw prior to maturity, then it will subject to the market rate, because there's the PT side that is also that is trading, and then there's a secondary market price there. So in this case, I think user should pay attention to whether there could be potential earning or losses if they want to withdraw prematurely.
Yeah. And users are able to toggle whether or not they want it to be a 1 week maturity or 1 month, 3 months, etc. Right?
No. So the
No?
maturity is in accordance to the pool. So every pool will have its fixed maturity. So basically, let's say the maturity is 31st of December of 2024. So anytime before the maturity, as a user, you can deposit your asset or participate in the market. But as a user, you also have the flexibility of withdrawing or trading out of the pool. But then you would subject to like the secondary prices.
So is the maturity decided by the people who create the pool?
Yes, that is correct. So at this point in time, it is still the protocol that decides on the maturity. But typically, the way we structure the maturity is to follow, like just to make it quarterly. Like September, December pool, March, June, and but of course, like usually prior to the setup of the pool, we will communicate with the points or the counterpart, the points issue or the counterpart, right? Just to identify like what would be the preferred maturity. So most of the time, we would actually favor shorter maturities because that's what users prefer. I think given the volatility and the uncertainties that we see in DeFi, people just feel more comfortable if it's like 1 month or 2 month maturity. So that's usually our preferred. But if, say, our counterpart has an interest in a longer dated one, we're open to considering that as well.
So, Zuling, for Uni BTC, once that goes live, then what sorts of maturity are you looking at to create on Pendle?
Yeah, I mean, this is something, so take the example of Uni ETH, right? So usually this is something that the Pendle team looks at the market and what is sensible. Right now for Ethereum, usually it's 3 months. Given that this is kind of like a sweet spot of, given how fast the market changes, and also, you want it to be like at least, a few months, right, to have meaningful yield. So we think 3 to 6 months is actually something pretty decent. But that's something, once everything's ready, we will definitely have a deeper discussion with the Pendle team to work on that.
Okay. And last but not least, timing on all of this. When is Bedrock going to go live? And I know that Babylon mainnet is a dependency of that. So I guess I would ask David, when mainnet, and then when can people start creating Uni BTC or staking the BTC and getting Uni BTC? And, when could people expect to start farming these points or trading YT tokens, et cetera, on Pendle?
Yeah. So for Bedrock, we already launched. We already did a soft launch for Uni BTC. So right now, people can use WBTC to mint Uni BTC. So behind that, once Babylon is ready, then we'll do the stake action on behalf of the customers. We will expand to other BTCs like native BTC or other wrapped BTC in the near future. So there are a few partnership announcements that we are planning to make very soon. So the reason why we started with WBTC is that, we think actually, WBTC holders are the ones that are already comfortable. So first of all, they're holding BTC, and secondly, they're comfortable with DeFi already, right? So they understand what is DEX, they understand what is Pendle probably, and also lending, etc. So we want to target those guys. That is $10 billion worth of BTC, and then of course we'll expand to other BTCs where just to let people to choose what they're comfortable with. So right now people can already get onto Bedrock.technology to mint Uni BTC and start to accrue Diamond, which is our point system. So that is already ongoing. Then of course, once Babylon is ready, we're gonna kick out the staking operation, and once our volume is significant, hopefully we can work with Pendle. So on Pendle side, that is something that we're still working on.
David, when mainnet?
So we are targeting a mainnet launch end of June. So this is a mainnet phase 1. So right now we're doing a bunch of security audits. We're also launching a testnet next week. That's the target testnet. Zhuling is one of our Fnatic providers. So yes, next week. We are working on integrating a bunch of wallets on that testnet right now, just the finishing touch. And so this will be a phase 1 launch as analogous to EigenLayer phase 1. So it would be locking the BTC on our staking contracts, and the Babylon, the chains. The first chain will probably be Babylon chain. It will be launched in phase 2. That will be a few months later.
All right. And TN, when people start trading YT tokens and PT tokens and zapping in the Uni BTC and Uni WBTC or whatever that ticker is, are people going to be able to farm Pendle?
Trading, no. Liquidity provision, yeah, they can earn some Pendles there.
Right. As with most AMMs, all AMMs. Okay, great. Well, this has been amazing, and there was so much alpha extracted out of this conversation. So I hope that those of you listening in live and listening in later are going to be able to catch this in time to optimize your yield farming strategy for DeFi Summer, DeFi 3.0. Let's go. All right. We're going to leave now. Thank you to the 3 of you for joining Interchain FM. It has been great. Thank you for sharing the alpha.
Yeah.
My pleasure.
Thanks a lot.
Thank you.
Thanks
Thank
for
you,
having
guys.
us.
Okay. Bye.
Bye.